Hello, folks. This is Steve Memory from Iconic Wealth Management with an educational economic update for February 2019. In this month's video, I'll discuss some of the major headlines that influenced markets in January. I'll also provide insight into what these developments could mean for you as an investor. Now, please stay tuned at the end of this video for a required disclosure statement. January 2019 is behind us, and what a difference a month makes. By the end of 2018, the S&P 500, Dow, and NASDAQ posted their largest annual declines in years. In fact, the S&P 500 and Dow experienced their worst December results since 1931. Fast forward a month, and momentum has swung in the opposite direction. The S&P 500 added 7.9%, and the Dow was up 7.2%. These gains mean both indices had their best January performances in at least 30 years. The NASDAQ increased 9.2% last month, which was its best January since 2001. These gains occurred despite the longest government shutdown in history continuing for much of the month. So why did markets rebound in January? A few details helped change investor sentiment, including the Federal Reserve comments and corporate earnings season. In December, concerns about how quickly the Fed was raising interest rates contributed to market declines. By January, however, Fed officials indicated several times that the central bank would begin taking a more dovish view. The Fed also chose not to raise rates after its most recent session, saying it will be patient when deciding on future increases. Market confidence grew, knowing that the Fed isn't rushing to hike rates again soon. Corporate earnings season also largely affects stock performance. By January's end, about half of the S&P 500 had released their fourth quarter results. The data reinforced that corporate growth had slowed later in 2018, offering no new surprises. Instead of driving market losses, however, January earning releases contributed to market growth. So why? This happened in part because of a few solid reports from large companies, which helped ease investor worries about a potential recession. In February, the remainder of corporate earnings season is ahead. Both global growth and the ongoing trade discussions between the U.S. and China may also remain on investors' minds. Further, we should receive some delayed data, which was postponed by the government shutdown, including the first reading of the fourth quarter gross domestic product growth. Try saying that 10 times fast. In the weeks to come, we will be monitoring these and other details, and we look forward to sharing new perspectives with you as they arise. But that's it for this month's Educational Economic Update. Once again, this is Steve Memory with Iconic Wealth Management, signing off for the month of February 2019. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 703-891-9518. We'd be happy to talk with you.